Thank you very much, Minds and Money, for organizing this event with some lithium development companies and Rodney Hooper and me at Minds and Money. I don't know if there's our 5th or 6th quarterly event where we're summarizing our views and introducing some interesting companies that are going to be needed for the significant shortage of lithium supply forecast over the next decade or longer. So I'm Howard Klein from RK Equity, and we've been in business 20 years, but about 12 or 13 in the last 12 or 13, we focused almost exclusively on lithium battery material developers. This is a list of our clients over that period, which include a number of successes from very early stages, including Western Lithium and Lithium Americas and Piedmont Lithium, which we have represented from some 10 or 20 million market cap to billion or multiple billions, and both Winsome Resources and Luna Lithium, which we're going to be speaking about today, are clients of ours from similar early stages as those two that I just referenced. This is just a quick disclaimer. Nothing that you're hearing today is financial advice. We're not financial advisors.
A quick review of a market update. So what we continue to see, and we don't disagree with analyst forecasts that show lithium demand on an installed basis and total supply is balanced in the near term. But the problem is, you have to ask yourself if this equation represents what drives prices for battery lithium chemicals, and if not, what does. And what we believe is the most accurate and most correlated to market prices, battery-grade lithium demand based on cathode and electrolyte production, less supply from recycling. So the logic is simple. If it goes into a cathode, it has to come from somewhere, and that's either supply or from inventory. And if you look at what's happened during COVID, the logistical challenges, new battery cell factories coming online with higher production scrappage, and EV market recalls, what we see is the differential between battery, cathode, and electrolyte demand and actual installed or even sold gigawatt hours is substantial. Incumbents started 2022 with effectively zero working inventory of battery-grade material, which means that they not only need to meet running demand now, but they also need to produce excess supply to try and restock inventories. What is it that investors should be looking at? It should be only battery qualified lithium material that matters, not aggregate demand. And that really is the key challenge, is whether the market can keep up. If we look at the battery grade market, in our opinion, it's been in a structural deficit since late 2020. And we've seen a drawdown of inventory since then. And if you look at the market consensus of EV sales forecasts going forward, there's no end in sight for a supply shortfall. Albemarle's latest presentation at 1.5 million tons lithium carbonate equivalent is 2025 demand. And if that's correct, we believe the battery grade shortfall in that year will be significant, something around the 200,000 ton region. Why is it that battery grade material is all that matters? If you look at aggregate net supply and demand, it looks like the market is largely in balance until 2025. But if you drill down into battery grade and qualified, you see the number is very different. We have close to 100,000 tons shortfall for this year, and slightly next for next year, and then back to 100,000 in 2024, and then closer to 200,000 in 2025. So it really is battery grade material that investors need to focus on. In January 22, EV sales were only 650,000 units, yet the spot price went parabolic. And that's a red flag for us, because you are already sort of redlining on supply and you still need to build up inventories and restock. We think the fastest route to market is spodumene to spare Chinese conversion capacity to increase supply. The other route to supply is late-stage conventional brines. We think that there'll be a lot of M&A and JV activity for assets that can produce by 2025. On that thinking, As a company, RK Equity believes 2022 is the year that OEM and cell companies will be forced into major M&A and upstream deals.
So Winsome Resources, we formed last year and we listed on the ASX on the 30th of November 2021 to what I think was a successful IPO, and we've been reasonably successful since then. And I just got back from Canada and spent 5 weeks there setting up our drill program and meeting local officials, regulatory authorities, contractors, and other lithium colleagues who are listed or have other assets in Canada. Part of the reason of the success thus far of Winsome and why we have quite a bit further to go, it's almost a trifecta of factors that some of them by chance, but they've all come together to lead to this success. And the three things that I refer to in this trifecta is the fact that we're focused on lithium, and that's sort of a given. Anyone doing that at the moment is going to be successful in this market, I think. But the second one is that we're focused in Canada, and in particular Quebec at the moment, which is a fantastic jurisdiction in which to be establishing any mining project, but particularly a lithium project. And the third thing that makes the trifecta is that we're actually listed on the ASX. So we've got a great commodity, we've got a great location, but we enjoy the support, the fantastic support that the ASX has offered us. And by that, I refer to our listing, where we aim to raise between $12 and $18 million, and we ended up getting offered over $80 million in the IPO. That was a little bit unfortunate for investors who either missed out or got cut back for the most part, but good for us as a company because it showed support and it showed great aftermarket support once we were listed. And we listed at 20 cents and we're now sitting today somewhere around 51 cents with a market cap of about $75 million. So we listed with 3 assets in the James Bay region of Quebec. And you can see the 3 northern orange stars there. So there's Canset, Adina, and Cermak. And since we listed, we've acquired the Decel project that you can see to the south. Now, Canset, Adina, and Cermak are all about a year apart from each other in terms of exploration. Canset's the most advanced, and it's previously had about 5,000 meters of diamond drilling done on it. There is a defined mineralized ore body there, and it's outcropping on the surface. It's fantastic grades. One particular intersection is 17 meters at 3.7% lithium oxide, which really is world class. And the other thing about Canset is that it's very large spodumene crystals. I'm going to jump ahead to this slide, although I may go back. And on the left-hand picture, this is a picture I took myself in October last year of a spodumene crystal in the outcropping pegmatite at Canset. And the importance of the coarse-grained spodumene is that it makes it very amenable to dense media separation. And we've had some preliminary test work done last year, and we've got some ongoing now, just to show how amenable it is. And the test work last year did some heavy liquid separation, which is the precursor and the indicator for DMS, and came up straight away unoptimized test work with a 6% concentrate. And that's really important because also with a great recovery, I should add, in excess of 60%, again, just on very rough test work. So we're refining that at the moment. But what that means, if we can aim for a DMS only operation, it means lower capex with no flotation. It means less permitting because we don't need a tailings dam. And inevitably it then means quicker to market. And it doesn't preclude us from then putting flotation in later on if we think the recoveries justify it and we can get more product out. So the metallurgical test work we've got going on at the moment is a very important part of our project development over the coming years. I'm going to concentrate on Canset mostly, given the time we have here. As Howard said, we're doing some drilling at the moment. We're very fortunate to be able to get a drill rig, and that's the rig in the bottom right-hand corner. Obviously, I took that photo myself about a week ago. Drilling assets are very hard to find in Quebec at the moment, and our country manager, Carl, managed to find that rig, and it arrived about 2 weeks ago on site. We're doing a relatively modest program of 2,000 metres, but when you add that to the 5,000 that's already been done, that's a very good base for the establishment of a resource at Cansett. And if you look at the, well, perhaps the top right, the beige blobs are a leapfrog model of the mineralised ore body we already know about from previous drilling. And obviously those lines are the drill holes, including the new ones. So you can see there's a considerable amount of drilling there. And then if I refer you to the left-hand map, the central area is the existing area that's been drilled with the 59 odd holes for the 5,000 metres. We're doing 20 holes, roughly 100 metres each in this campaign, 10 of them in that existing area to increase our knowledge of that ore body. But then we're also targeting to the east and west in those red circled areas you can see. A magnetic survey we've had done over the property indicates there's anomalies out there that are similar to those that exist over the known mineralisation in the centre. So we're drilling those, hoping to find pegmatite that's mineralised. If we do, then that'll extend our strike length to well over 800 metres. So we're just over halfway through our drill program now. We've drilled that central zone, the infill drilling. We've now got the rig out on those outlying areas looking for extensions. The first samples should be at the lab in the next day or two. And then, like every other contractor, the labs are pretty busy in Quebec, but they've indicated it's about 4 weeks for results. So in 4 weeks, we should start getting our results in from this drilling campaign. We put out an announcement last week that there's visible spodumene in our very first drill hole, which is exciting. Of course, that doesn't indicate the extent of lithium mineralisation, but it's a very good indicator that there's going to be good news. We've also got a gravity survey occurring as we speak, and that'll be finished next week. And the gravity survey seems to show up great anomalies where there's pegmatites. And when we overlay the gravity, the magnetic survey, and the LiDAR survey, which indicates detailed topography, we will generate targets over the rest of our Cansett project. And I'm just jumping back on the right-hand side, you can see the 390 claims we have in total at Cansett, and we've really only explored and drilled about 15 of them in the centre there, which is our previous drilling. So there's a lot of good news to come. Again, in about 4 weeks, we'll have this target generation. By then the snow will have melted. We'll have teams on the ground who will investigate the targets to then generate drilling targets for later in the summer towards the end of the year. And really, we're just heading towards a maiden resource at Cansett within the next 12 months, potentially quicker depending on how drilling goes. That timetable summarises what I just described. We're going towards a maiden resource within 12 months at Cansett, and we'll have a scoping study with that.
So Luna Lithium is a private company that's developing the Pilot Creek brine project located in central Nevada. Luna is a company that I've put together over the last 18 months around a very interesting brine target in central Nevada, in sort of the right place at the right time in the lithium boom, where both prices and policy are coming together to really support moving towards greater US production of lithium chemicals. This is sort of a picture of me out on the playa about 6 months ago. We have put together over the last year a program that involved 2 geophysical surveys to define our brine targets, a seismic survey to take a look at the subsurface lithology and get an understanding of how and where to drill. We have gotten our initial drill permits in place, and we have, as of last week, a drill rig on site, roads built, 2 out of 5 drill pads constructed, and a drill in the ground that just got down to about 200 feet because we don't use meters in the United States as of yesterday. And so I want to sort of talk just a little bit about why I decided to essentially come back to the United States from Argentina and take the helm of an exploration company. And that's because I really had a front row seat to Argentina over the last decade, and a front row seat to watching Argentina develop into one of the leading lithium, not only one of the leading lithium producers on the planet, but also go from a one-trick pony with Livent to being the home of every single project that is shovel ready when it was time for the lithium price to boom, and when it was time for some of the bigger companies to move into the lithium space. And so one of the expressions that I've said over the last year is that the world's going shopping for ready to build lithium projects, and Argentina is the only jurisdiction that has projects that are ready to go. And so when I came across this project here in Nevada, which was introduced to me by Alex Grant, who's one of the princes of DLE, I think, as Howard says, it made sense to put together a team and put together an exploration focused and an exploration minded group around taking that from an idea into a reality. And so we've put together an excellent team of service providers, from Montgomery and Associates working with our hydrogeological work, to an excellent seismic and geophysical team, to EM Strategies, who's helped us move through our permitting process with a speed that I don't think anybody else working in Nevada would believe that we were able to do, to Premier Drilling, who has gotten out on site and is working closely with Montgomery to understand how to do brine hole sampling in a jurisdiction that it hasn't been done very much before. So this is a little bit of an overview of the Pilot Peak project. And one of the things that I like the most about this basin, or this brine target, is that most of the mining projects that I've looked at in at least my experience, the only thing you aren't able to move is the mine. But with this project, we're actually located at the intersection of two federal highways. We have a power line running over the project, and we're located more or less at sea level, meaning that a lot of the DLE technologies that have a bit of a challenge working at altitude, or that are very energy intensive, this is a spot that's tailor-made to put those technologies into action. So as a project, you can kind of see that we're in the right neighborhood. We're right next door to Clayton Valley, and we're in the drainage basin of known lithium claystone deposits at the gravity low. And so when you have Ioneer located to the south, you've got American Lithium located to the east. We're in an area where basically you kick a rock and you find lithium contents of some kind of interesting value. And this is another of the parallels that I see between central Nevada today and Argentina about a decade ago, where the lithium anomalies are exciting and interesting, but a wave of exploration is going to be needed to do the science, to do the resource definition required to turn some of these interesting deposits into projects. So one of the things that we as a company work towards is having some of the highest environmental standards. And one of the reasons I like a brine deposit, if it's there and if it's workable, is that you don't have to dig a hole. And so understanding that you're able to work with minimal surface disturbance, and understanding that you're able to apply DLE technologies to have higher standards of environmental sustainability is really one of the benefits of this project, and one of the benefits of working in a brine environment. I've also taken more steps than most to understand the need to have a diverse group of people from day one in a project, working with more women, working with more communities, and more people who have a stakeholder rather than shareholder mindset in a project. And so this is just a little overview of our timeline of what we've accomplished so far and what we're looking to accomplish going forward. In the first half of last year, we were able to increase our land package and do 2 phases of geophysical surveys, as well as a seismic survey. And we have put together a 43-101 compliant technical report as of this quarter and gotten a drill rig on site and are working towards drilling between 3 and 5 initial holes to work towards a measured and indicated resource. We believe that we will be on track to hopefully have some form of a public listing or public event within the next few months. And that will enable us to take the Gantt charts that sit behind brine development projects and compress them into a shorter timeline than most are able to achieve.
Can we expect to see increased involvement from majors like Rio Tinto, Anglo, BHP, et cetera? If so, how? Absolutely, yes. Rio and Rincon is one example of that. Rio is probably the most advanced in their thinking of that. I've often compared Quebec, where Rio Tinto has a very substantial aluminum business, to what Rio could do in Quebec in lithium. There's, for all the reasons that one is in aluminum, low-cost hydro and clean aluminum, et cetera. I expect that Quebec will evolve and Rio could take a leading position in that, and they might, having bought Rincon in Argentina, which is a DLE brine. I speculate, I've said this a few times, that they could buy Livent to get access to their brine in Argentina and their technical expertise, at the same time have optionality on Livent's Nemaska asset in Quebec. Will we see Anglo, BHP? I don't know. BHP is in nickel. I haven't heard or seen Anglo, but you've seen Sibanye Stillwater come into Keliber in Scandinavia and also into Ioneer. So Sibanye, I do expect miners to get into the chemical space. I also expect oil companies to do so, as well as battery and auto companies. How should we think about valuation of lithium equities? We have two companies in front of us here that are at early stages. You know, Chris is about to drill. He has a 50 million market cap. In June of 2020, you know, Piedmont Lithium, which had kind of like an advanced, you know, project scoping study, major resource, was at a 50 million market cap, and they're now $1 billion. But just how do we think about producers, advanced developers, you know, near construction or near full, approaching being fully funded, things like Lake Resources, 2 billion market cap, you know, AVZ, you know, 2-3 billion market cap. How should we think about that, like at this point in the cycle, relative to where prices are, you know, the structural deficit you're seeing, you know, and the M&A that you're suggesting is necessary?
You know, we have a view, and looking at the supply demand dynamics for battery grade, the question, I guess, that is being posed, and that's causing disparity between valuations, is how steep is the backwardation of lithium pricing going out. So we're at all-time highs. We're at 70, 75,000 or whatever it is, even near 100,000 at spot and 6,000 on spodumene. How steep is the backwardation? How long are those prices going to last? Because you're seeing a favoring of near-term producers on the expectation that they will capture some of these higher prices and then it will taper off. Now, I don't think one can expect prices to stay up here forever, but at the same time, I think probably the backwardation is a bit steep, and I think in order to vaguely keep up with demand, more marginal assets will be brought into production, so the cost curve and the pricing curve is going to change. So on a typical basis, when a company is still in development phase, people look at a price to NPV often, and then when it goes into production or closer to production, they look at an EV/EBITDA multiple. I think, you know, that's probably too narrow. You know, if you look at something like Winsome, Chris's project, if it's going to resemble something like Atlantic or what have you, where it's a DMS only and you can do low capex relative to market cap, then assuming all other things being equal, permitting, etc., that has a much higher probability because capex to market cap will be a much lower ratio. So the likelihood of getting into production is better. And then you look at, infrastructure again and handicapping. You look at Emily's, where it's located, what's available. It also starts to reduce, what commitments you need. So I think that the implied backwardation on some valuations is a bit steep. I think prices are going to remain robust for a longer period of time, so that early stage projects like the two we have on here are likely to have a higher chance of capturing those longer term decent prices, and there will be a big pull to par, or whatever you want to call it, as time goes on. What is your NPV? A lot of the models, we have $1,000 spodumene, but it's trading at $6. So is 1,000 realistic on a 5-year view or an 8-year view? I think it's probably a bit low, but people seeing is believing, I guess.
Of course, the other simple way of valuing is what are other people paying in the market at the moment. And I always look at what Sayona just paid for the Moblan project in Quebec. That's got a resource of 12 million tonnes at 1.4% lithium oxide. Of course, there's the ability to expand that. But to get that, they did 17,000 metres of drilling. We will have done 7,000 metres of drilling by next week towards a resource. And they paid equivalent on a full project basis of 200 million Australian dollars. I always
Look, Chris, the biggest bang for buck is always the drill bit. As soon as you put those numbers up, we've seen what it's done for Atlantic. We've seen what it's done for others. When you show an increase in the resource, Emily's got a drill going now. That's the first quantum leap. But I guess, I think where we're going to see longer term, material upside, there's always upside in the drill bit. But I think that as prices remain stubbornly higher than people think they're going to be, then there is time for new early stage projects to come online.
I'll weigh in, Rodney, as well, that as more and more people wake up to a reality that lithium shortages are real, and they're not some lofty, ambiguous problem that's going to happen in the future. I think projects that are early stage today that are capable of moving forward quickly will be better positioned to get real offtake agreements and real offtake tied to large equity financings from major lithium buyers, major car companies, than the same company would have been a few years ago.
And on that theme, and we know this firsthand, Emily, is some major OEMs are looking very upstream. So they're looking at early stage plays. So I agree with you. If you believe that the infrastructure and the opportunity is there, we're going to see some early stage plays get funded or M&A, and I think that's going to also support the market. I think people will be surprised what early stage commitments companies will make in this year. I think this year is the do or die. I think there are a lot of OEMs who are going to come up short on supply, and they're going to do the exercise that you're talking about. If it can be done, if it can be permitted, if the infrastructure is there, we're going to see, I think, some aggressive plays.
Sounds great. We got to go now. Thank you very much, Chris, Emily, Rodney. Watch this space. It looks to be exciting the next kind of 6 to 9 months throughout the rest of the year. I want to see big names writing big and small checks for advanced full funding projects and early stage ones like this. So that's the key catalyst that we think will keep momentum going for these lithium equities alongside the continued high prices. So thank you, Andy and Minds and Money, for having us again, and look forward to doing it again next quarter.